In today's interest rate markets, let's take a look at the 10-year note futures today as they're realizing a sharp move higher here today. We're seeing them up pretty strongly. We're seeing most of the treasury markets catching a bid today. And with that, we're looking at a 10-year futures market above the 133 handle, 133.10 on the September future currently. And that's basically a 4-month high when you look at the price action for the futures market. So some significant strength here to start the week. And I think when you look at some of the reasons why we're seeing this strength continue, you got to point at the data points initially. I think we did get some weaker data points out of Europe overnight. We did see further weaker data points out of the United States this morning. And also, I think just the general volatility within the various asset classes is leading to a bid. When you look at the US dollar catching a bid today, we're also looking at, as I mentioned, the treasury markets catching a bid as some volatility in the crude space, that's for sure. We did see some volatility in the energy space, and we're also seeing some volatility in the equity space as well. A divergence kind of taking place between various sectors within the market. So I think that that's contributing to why we're seeing the potential bid here in the treasury markets, at least for a short term, as expectations appear to be shifting depending on the asset classes and their valuation prospects. So looking at the yields, let's look at the 10-year yield down to 136 basis points, just about 1 basis point off the low of the session. And that's the lowest level for the 10-year note futures and the yield, I should say, on the 10-year note for basically the last 4 months. And also across the board, we are seeing the yield curve shifting quite significantly lower today, where the 30-year yield is below 2% now. And the back end of the curve has rallied significantly today. And with that, we're seeing yields being pushed lower. So we're shifting of the dynamic there, and that's certainly playing out in the banking sector as we're seeing banks under some significant pressure here with the shifting of the yield curve. Another area of volatility that could be leading to why we're seeing this bid in the treasury markets today.